All right, hello. For this video, we'll be looking to interview our friend here, Ghosts. This will be his 15th year in trading. Welcome.
Hi.
Just to start it off, how did you get into trading? What was your background in all this?
So since I was little, like maybe 8 or 9 years old, I was saying that I wanted to be rich,
Hmm. The dream
And
of many.
yeah, and when internet became popular, like I was like 10, I think, I started making research online on how to get rich, how to make money, how not to live in the middle class.
Understood.
And at some point, I came across finance that was advertised as the biggest place to make it. And by doing some research, I came across stock trading at first. But the problem with stock trading is it needed to already have some kind of capital. So then I continued my research and I started to learn about the skill first because I was saying like, okay, maybe I don't have the money now, but at some point I will, and it will be easier to make some kind of money. So uh, we were talking about me being 13 years old when I was thinking about that.
So at
Then
13,
13, yeah.
okay.
So then down the line, there was something that became popular and that was quite easy to access. That was binary options. So binary options at the beginning was kind of hard because you lose more than you make uh, when you win. So what I did is I studied a bit of technical analysis at first and tried to find some ways to make it. And you have to know that I come from a background of mathematicians and physicians. So my dad is a mathematician, so that's kind of where it began. And I started to have a statistical approach to how I was studying the binary options, and I came across a way to have an edge. I was like doing arbitrage over one minute, and at some point, I began to make money with binary options.
So you'd say at the age of 13, you were able to place your first trades.
No,
That's just when you're studying, started getting good.
yeah, I started to study and it took me about 3 years before I placed my first live trade.
And so in doing so, that method you were able to develop for yourself, did that aid you when you went into looking for possibly a mentor or an organization to work with?
Um, at that time, there was no one really around to teach me things and no one to learn from really. So most of my most of my learning was made through books. So at first, I started to study how the economy works. So it was mostly books on fundamentals more than really trading. Then I came across the famous books about technical analysis with guys like John Murphy, for example. And I started to read those books. And if I would say the books that made the biggest impact in my technical analysis at first were Toby Crabbe's book and Linda Bradford Rashke's book, Street Smarts.
Yeah, that one's a legend right there.
Yeah. So those two gave me an idea of how you should go about studying technical analysis, just not like watching patterns and trade them every time, but more in a quantitative way where you study statistics, you study what makes a good market for the pattern, what makes a bad market, and how not to take every setups, you know?
Correct. Yeah.
So that's where my story begin with binary options, because I was able to take all those different ideas and translate them into a short-term approach. And when I say short-term, I was trading 1 minute binary options. So it gives you a picture of what I was looking at that time.
And so you mentioned that you were starting to lose more than what you were able to actually end up making. What from there had you looking for other opportunities, other markets or methods of earning income?
The thing is, at first I was saying that because binary options worked in a way where when you win, you only make 70% of your wage, but when you lose it all, you know?
Correct.
So what happened is when I started, it was the first time with me dealing with money emotions, as I would say, like greed, fear, and all those emotions that comes with risking real money. Because I'm 16, that's the first time I'm actually risking money. It's not even my own money because that's my dad that's opened an account for me. So everything that comes into your mind is kind of interacting with the way you should be trading. And then you get used to it and you go back to what works and just focus on the process instead of the money, you know?
As everyone should.
And I then started to crawl back up. So I started with $500 in a broker that existed at the time. I think the name was OptionBit, and I started to turn a profit maybe 1 year in. Like I succeeded into doubling the initial account 1 year in. And then I started to study about money management and compounding and those kind of concepts. The one that didn't really stick with me was martingale. Martingale, I think you say.
Yeah, it's like you just keep averaging downwards until eventually it's
Yeah, that one was a bad idea because at the time my account wasn't able to sustain more than 4 rounds of that with the minimal stake as a beginning stake. So I kind of dismissed that one and just went to the opposite. Actually, when you win, you place a bigger trade and bigger trade and bigger trade. That's what I did. So
sort of
what
scaling into the winners.
yeah, so I was studying my statistics and the probability I had to produce more than a certain number of winners in a row, you know. And I came up with a formula that I could compound my earnings on 3 different trades in a row and then go back to my original stake. So at that time, I was able to make really bigger profits and bigger profits. But I reached a point where the broker was not happy with me winning money because we all know that binary options is not real trading. It's like the trading casino.
You're starting to bankrupt the casino.
Yeah. So they gave me 2 options. So they either send me all my winnings and close the account, or I wouldn't be able to place any more trade with them.
sound like much of an option. It's more just
Yeah. So at the time, they just sent me everything, and I was banned. But I wasn't actually banned because that was with my dad's name. So I opened, at that time I was like 18, so I was able to open my own account with them. And I did the same thing until they banned me with my own name too. And then it was like with most sports bettor that have an arbitrage system. I began to just open an account with different binary options broker until I was banned from most of them. And it's funny, some of them weren't even telling me that I was banned. I was just not able to place any more trades. Every time the system would come up with a bug saying due to market conditions, you're not able to place the trade, and so some bullshit like that. And then I decided, okay, I'm starting to waste my time because it's not going to be the long-term solution. So I have to go find something else.
something
And
that won't
that's
just
when,
ban you out.
yeah, and that's when I came across CFDs. So with Forex and mostly Forex, I would say. And the difficulty with CFD was it's not only deciding a direction and a duration. Now you make profit with a certain a certain movement. It means that just having a 1 pip profit is not going to be enough to make you a living. So I had to have a way to study price movements, ranges, volatility. So I went back to study mode, and I was more of a swing trader, if I would say, with CFDs. And there are some stuff that I used a lot, like commitment of traders report, Fed balance sheets, everything like that came into my trading. And I became more interested in the macroeconomic aspects on what makes price move from one point to another without really caring about the in between. And then came the how to time my entry and doing it through technical analysis. But it was always the same. It's a statistical game, so I was always tracking my performance, tracking my process, see if I could avoid certain setups in certain market conditions, and that's kind of how it was with CFDs. And by that time, I was in college. I was in Université de Montréal.
Were you following in the footsteps of your parents as far as like getting a degree in those kind of fields?
Yeah, because I went into a bachelor in applied mathematics. And then after my bachelor, I did a master in computational finance. And that's my study route. But at that time, when I was I think it was my first year in college, in the bachelor, there was a statistics professor that introduced me to options and futures. So I heard about options from family friends, and I kind of knew how it worked, and I was doing it on the side too. But the way to study it through futures and order flow it came from what my statistics professor showed me, because on his off time, he was actively trading in the futures market.
What an amazing professor.
Yeah, and I was only able to talk about some subjects like that with him because of my academic results. Because at that time he was trying to recruit me into being you know, when the professor has other students grade the papers for him.
Yeah, like a student aid.
Yeah, that's what he was trying to recruit me to be.
Give him more time
So
to trade up the futures.
yeah, and I started to learn more. And when I got out of university, I went straight to a prop firm. So I'm not going to name the firm, but it no longer exists too. And in the prop firm, I already knew a bit about order flow, and it was just learning how to run things as a business. And that's what came from the prop firm. It was how do you prepare your day? How do you debrief your day? How do you manage everything in intraday? The amount of risk you should take when there is an event and you're prepared. You shouldn't like trade the same size. You should trade a lot more size, and all those kind of different things came inside the prop firm. And that's also where I learned that scalping is way more productive than just day trading or swing trading. Because when you go into a prop firm, what you hear about most is their biggest trades, their swing trades, the trades they took with macro events in mind. But what they don't tell you is that 80% of what they make in a year is made through scalping. And yeah, that's just a reality, because they have setups that they take every minute, every 2 minutes, and that's how they build their bankroll during the year.
And you got your bread and butter, and then you got those outlier moments from news events and such.
Yeah.
What would you attribute from then to helping you embrace risk? What was something that maybe someone told you or someone showed you?
What I would say is that it was at a time that I didn't have money on my own. Like I wasn't poor, but I wasn't like able to have a big exposition in the market on my own. So when I was there, I learned to forget about monetary risk and think more about relative risk to what I to what I have available, you know. So being able to forget about seeing, for example, a $500 loss in a single minute, and just trade the setup and let the statistics play out. That was the biggest thing. And because I was taking risk for so long already, I started quite young. So my mind was already used to not see or be attached to money the same way most people are. It was easy for me to go from, oh, $500 is a lot of risk, to, oh, I could risk 5,000. There is no problem, you know?
Yeah, it's amazing to think that when you started out, $500 was your beginning amount, and now that being in that prop firm, $500 is what, a stop loss.
Yeah, that was it. Because uh, in my first year, I was able to trade 10 lots, and I was trading bonds at the time. So 10 lots is one tick is worth $300. So gives you an idea. And if I would say that there was a big impact in my way of seeing things, it would be a book from Gary Norden. The book was called An End to the Bull. And that's when I started to think, well, scalping is maybe the best way to go.
It's definitely more consistent.
Yeah. And my trading never stopped evolving. Even now, it's still evolving. So,
As it should. The markets have been changing drastically from when you started to how they are now.
yeah.
So from what you've learned in prop and organizing your day, what helps you start your day correctly? What are the first things you do when you wake up?
The first thing I do when I wake up is I read every headlines that I can find on the market. And the market has turned into something that's run by a narrative, I would say. There is a main story, and everything that's going to impact the market is going to be related to that story. So what I do is every morning I'm trying to find out if the main story is still the same, or if there is something else that gained interest in the mind of participants. Because before we could say that the market was rational, but right now there is not any ounce of rationality involved in the market anymore. So everything is emotions and hype. So you have to find out what's the main line and then trade around that main story. So that's really the first step, is reading headlines and finding out if the same narrative still apply. Then the second part is watching every market and what they did overnight. So commodities, European markets, Asian markets, and then watching what the US markets did too, and build some kind of a scenario for the day. So based on, okay, the narrative tells that the market should be reacting that way, and overnight everything happened in a way where it makes sense with the story. So when the market opens at 9:30, I should see the first move doing that kind of things, and then I should like favor that direction more than the other. And the key part, what I'm saying is, I'm not going to take only trades in my bias direction. I'm going to favor the direction. So if I have trades that tells me sell and I'm mostly long, I will still sell it. I will just be more picky, more careful around what I do.
Right, be quicker to take profits when you see them, as opposed to ones that go in your narrative. You want to let those run a bit more.
Yeah.
And so now, knowing that you had traded bonds in your time of prop, now you're trading what seems like US markets, I would imagine equities.
Yeah. I'm trading only NASDAQ and S&P 500 futures. Nothing else.
And do you actively keep watch of the other correlated markets? Like you mentioned, watching them overnight to see an idea of how you're opening up for the session. Do you continue to watch them throughout the session?
Yeah, of course. At all times, there is 8 or 9 different markets on my screen. So I'm always watching energies, metals, currencies, indices, and bonds. I'm watching everything. So if there is one market that starts to change the way it was trading, and there is another one that does the same thing, it tells me that market conditions are changing. So I should be aware not to just blindly trade the same way I was trading until now. Because most of the time, the market works as one big machine where everything lines up and makes sense. But too often, you only realize it when it's too late and when it's in hindsight. So being able to watch everything and just decide to be more careful because one market suddenly changed the way it was trading, then another did the same. So it's not always going to be the same relationship. Like it's not going to be energies moving first and then metals and then bonds. It's always going to be different. The market is not doing the same thing. It's repeating similar patterns. So what I do is when I see a shift, I'm starting to be more aware of what's happening in my own market.
So what is it that keeps you executing on equities, even though you do have the opportunities to watch shifts in the other markets?
It's really, I think the structure is cleaner in equities, and the liquidity is the liquidity and the volume is really comfortable to trade. And I love volatility. We have to say that too.
You're getting plenty of it now.
Yeah,
That's for sure.
I wouldn't be able to go to bonds because now that I tasted moves in Nasdaq and S&P 500, seeing the bond dumb makes me yawn.
And when did you begin to notice from switching off into equities out of bonds that you started realizing you were having like this consistent approach to the markets?
The thing with bonds is it was actually a good experience before going to equities because I was able to see everything in slow motion, if I would say, and learning the concepts that way and doing it so many times before switching to equities made me able to transit and be able to study the flow in S&P 500 before I started to really go in. So it wasn't like I stopped bonds one day and started S&P the next day. I was still actively trading bonds, but trying to understand the flow of S&P in the same time. And when I reached a point where I say, now I'm able to read the flow and I can trade it consistently, that's when I decided to switch.
Yeah, for sure. I've had a similar journey myself. I would think that bonds definitely gives you that chance to see the order flow and then think for yourself. But then, of course, once you hop into equities, it's kind of like you have to have been practiced up and ready for it.
Yeah.
And so,
The good thing with both markets is bonds, you have multiple bonds, multiple expirations. So you have the 5-year, you have the 10-year, you have the 30-year. There is also the ultra bonds, but I'll just stick to the classic bonds. And it's good because it allows you to have direct correlations to your market. So making a decision is not just based on a setup, it's based on what I would call context. And it's easier to do good decisions like that because most of the time setups are going to appear every day, but the context is going to be the deciding factor on whether you take it or not. And when you switch to equities, it's kind of the same. You have NASDAQ, you have S&P, you have Dow Jones, you have Russell. So you have multiple markets that are like tightly correlated to take your decisions.
With the recent few years that volatility has adjusted higher, how are you adjusting your approach when it comes to like stop placements, targets?
Okay, that's an interesting subject. Last year, my trading was based on having a fixed stop, and I was more day trading than scalping. Of course, I had a core position and I was scalping around it. But it was because the volatility was a bit less than what we have now, and the flow was a lot of times going in one direction. So it was easier to have a main position where I take most of the move and scalp on another contract on the side, just to be able to profit from everything. But this year, because of the flow and the way it's a two-way flow, I would say, you can feel that the market goes both ways easily and with great speed and volume. So it's shifted in a way that I no longer have a core position. I'm only scalping in and out of the market for the whole session. And it made me stay less time in a trade. So over the last 2,000 trades, I averaged less than 1 minute in a trade. So yeah.
And so with that kind of information, that means you're taking like a sort of statistical approach to your own executions. You like to review back and see and adjust.
Yeah, of course, every day it's going to be checking my statistics and seeing if the edge is kind of fading or if my execution is bad. And I have certain metrics that I look at a lot, like MAE, maximum adverse excursion, time spent in the trade, and I also look at the skew in my trade direction. For example, if the trading day was mostly going down, it was a bearish day, my trade statistics should show that I was 60% short and 40% long. Same if the day was bullish, it should show that I was 50%, 60% long and 40% short. And if the trading day was ranging, it should be around 50-50. But yeah, every day I'm going to look at my statistics and see if everything is going right.
So with that kind of information in hand, you come into a session knowing beforehand that there is, say, a news event. How do you do you happen to trade news events?
Not necessarily. This year I haven't been really trading news. The only thing that was really helpful is the interest rates decisions, but even then I found it too dangerous to trade around FOMC, and that was because the volatility is already so great during the regular trading hours without news that the news just makes it out of my comfort zone, I would say.
Yeah, it's sort of hectic and there's no real initiative to either side. It's just
Yeah, and you have to understand that those kind of news are mostly interviews from the Federal Reserve. So every time he's saying a word that triggers investors, the market is going to move like in a brutal way. So you can be taken offside quite easily just based on keywords like transitory, for example. That was a keyword that triggered investors a lot over the last year.
Everyone has their own opinions on what direction it should go off of when those words are said.
Yeah. And because of that, I decided that this year I should focus on everything that's outside of news.
Yeah. Best to focus on things you can control rather than things you can't.
Yeah. So the news, I do use them and study them to have a macroeconomical bias, but I'm not actively trading them.
And so coming into this interview, we had set up as the fact that you did earn 7 figures.
In a year, yeah.
What was an amount that you started, like a good amount that you started with to help you towards that goal or to that target?
Um, the thing with me is I don't like to let too much money sit in my trading account. So most likely I will never have more than 200,000 in an account.
Yeah, you gotta also remember to pay yourself, of course.
It's not even to remember to pay myself, it's because a broker is like a bank account. They have a maximum amount they can insure you for. So I'm not going to let the money sit, and in case the broker goes bankrupt, I can only claim back, I think it's 150,000. So I'm not going to risk having a lot more than that inside and not being able to claim it back if they go bankrupt. It's just for security. And it's like when I withdraw the money, everything is invested in a way where I don't have to worry about the place going bankrupt, you know?
Understandable. That's smart. So with that year that you made those 7 figures, what
Yeah.
if you had to single out would have been the best trade? What was the outlier that really helped you decide to push size or let a trade keep on running?
Um, I realized during the year that my performance was so consistent that I should try and make the most out of the year. So I started pushing a lot more size. And because I'm not really like attached to the money, it was easy to do it. But along the way, I started to be a lot less accurate and accepting a lot more risk. And I wasn't like happy with my performance, my pure performance. So that's why I decided to take a big step back and go back to lower sizes, because it was going right. Everything was good. I made my best year, but if I had continued that way, at some point there would have been something that happened and that made me lose a lot of money.
It's a risk ruin. So now that you're back down to smaller sizing, at what point would you look to start shifting back into a larger size, if any time?
Um, it's just the time I get used to my new way of doing things, because this year has been a lot more on the very short-term scalping than previous years. So when I feel that I have a great perception of liquidity and volume and the max size I'm able to play with, I'll progressively scale to that size. Because what I do right now, I think it would be difficult to get away with 50 lot, for example.
Right? It'd be harder to get your fills in.
Yeah. Even sometimes it's hard to get a fill on one lot. So it's going to take some time, maybe a few months, and I'll be back to sizes like 10 lots. But you also have to understand that even though my size is way below what I used to do, my performance is still in the same, my PNL performance is still in the same kind of amounts. I'm not like doing really lower than what I did previously with bigger sizes.
Right? With before, you let size get you your profits. Now you're letting the volatility take you to your profits.
Exactly. So with the volatility we have, I need less size. And with the way I'm trading more frequently, I need also less size because I'm doing a lot more trades. I used to take less than 10 trades a day. Now I'm averaging around 30 trades a day.
Yeah, it's a 300% increase of what was you were used to.
Yeah.
And so if you had to pick out one of the biggest flaws you faced this year that you are currently working on, what would that be?
Oh, the biggest flaw.
You know,
I would
something that
say I would say sometimes being too fast to take profit, because even though I'm scalping, sometimes I know, and when I say I know, it's I'm speaking in a probabilistic way. So there is more than 80% chance that something is going to happen. So I know that the market is going to do something, and I'm still taking profit before it does it. So it would be not letting some trades turn into runners.
you take your small wins as opposed to your 80% probabilities, you could have allowed it for, being a huge outlier day.
Yeah, let's say I would take $200 profit in one trade, but I know I could have let it run for 1,000. So
I
those
guess
kind of trades.
it makes sense. It tends
And
to be something that scalpers have to face with knowing when those moments occur where they can allow it to run a little bit further.
yeah, and sometimes I'm also too quick to scratch a trade. So I will enter the trade. There is nothing really changing the conditions that made me take the trade, but it's not going fast enough my way, so I scratch it. But then what I wanted to happen is happening, and I'm like left out of the trade because I scratched it already. Yeah, those kind of things are things I'm actively working on.
And if you were to be taken to say the beginning of your futures trading journey, and you were starting off in equities, what would be the best advice that someone could give you?
The best advice, it would be study correlations between markets. It's best to understand your market and its correlation than just to have one market and trade it. I'm not saying you should trade all the markets. You could trade just one, but understand the correlations around it, because that's what's going to help you make better decisions And the problem with trading, with most losing trading, is the lack of context, and the correlations gives you just that, the context. And yeah.
Senor,
Yeah,
thank you for your time. This has been a great chance to speak with you. You know, it's good that you were able to share some of these things, as well as your journey when you started off. And I guess if I had to say, if you had the opportunity today, would you go back to binary options?
no, no, I wouldn't. Because by the end of the day, when everything was said and done, I have more than six figures that's not been paid by binary options broker. So
That should have been
yeah,
the most important advice right there. Don't do binary options.
exactly.
All right. Well, thank you again, Ghost.
Yeah.
Hope to catch up with you some other days. Let's see if anything comes off. If volatility changes, maybe we'll do another one.
All right.